Good afternoon, George Cavaligos for HFT Bonds. I gotta laugh. I'm sorry, guys. Last night again, another big night. You heard the Apple story. You turn on your computer and you think the bonds and notes are going to be up half a point. Notes were up 2 ticks and bonds were up 5. And I was like scratching my head going, wait a minute. Apple's down $50. The Nasdaq's down 45 handles, and the notes are up 2 ticks, and the bonds are up 5. Didn't do much. I was running back and forth around the house doing stuff. I walked back and I looked again, and the notes had traded, I think, 15. The high yesterday was 15 plus. And I think the bonds were trading up, I want to say like 13, 15, not even 12. They weren't even near their highs from yesterday, which I believe was 17. And I'm sitting there thinking, this is crazy. How come they're not rallying more? This can't be good for the bonds and notes. Well, went to bed after watching some hockey, woke up early, and I see that we're trading at new highs. We made new highs by 2 ticks in the 10-year and 2 ticks in the bonds. Or no, actually the bonds just retested their previous highs, I think. Hold on a second. Let me double check that. Yeah, the bonds didn't even make a new high. They double topped 146.5. So, you come in this morning and you're looking at the bond chart that I sent out in the morning email, and I'm like, this is a key day. We're at the apex of 2 important daily trend lines. We got a big move coming one way or the other. I think, I'm favoring the downside because I've seen these warning signs over the previous couple days that I've highlighted in the videos and in the email. Declining volume, declining, magnitude of new highs. This morning, very minor increases in open interest. After the last week, I think every day we saw about a 25,000 average increase in open interest in the 10-year. And it was up like 3,000 yesterday. So here we are making new highs, supposedly in this new bull move that a lot of guys were talking about yesterday, on Twitter. Ooh, breaking key resistance here. And I was just like, I don't see it, guys. Where is this key resistance? We didn't even fill the gap in the bonds yet. Well, I put out in the chat room this morning, right after the number, the market broke only a little bit after the jobless claims number came out, a lot stronger than expected. Some people are saying the seasonal stuff is still a problem because of the holidays. Okay, fine. The market didn't break, but I said, you know what? Because of the magnitude of these trend lines and what I'd seen the last couple days, it was time to put a short on. I said, put an insurance short on here in case any of these other numbers come out strong. Well, boom, the flash manufacturing PMI number expected to be, 54, comes out 56 something. And then we started selling and rolling down, through support levels at that point. We hit some stops. We took out yesterday's lows at 05 in the 10-year. We took out yesterday's lows in the bonds. We broke the uptrend line in the bonds, and we broke the uptrend line in the 10-year. And then the brakes got hit. At that point, I'd covered some shorts. My problem, I think, at that point was I didn't sell enough on the first sell signal that I got. Made a little bit of money. Wanted my shorts back, and the market bounced, and I started looking at the 04 plus to 05 plus area as a great place to sell against the old lows at 05 plus. Well, I should have waited for the 08 plus lows because that's where the market went back up to. Bonds got all the way back up, above their previous lows too. You got this overlap. Again, whenever Elliott waiver says overlap, that means corrective type stuff. Impulse moves, highs don't get overlapped by lows. You make a high, the market pulls back a little bit, you make another higher high. None of this kind of stuff where the market breaks and then goes back above previous lows and then breaks again. That's overlapping previous highs and lows. That reeks of corrective type trades. So now I'm sitting here, I'm flat, I'm looking for the overnight trade. If you look at the charts, the last 4 Thursdays, basically every Thursday we've had since, December, what is it? Well, let's just do it Jan 4, Jan 3. Every Thursday, the market has broke hard. Every Friday, either overnight or early Friday AM, the market has made a significant low and then reversed higher, closed higher, and then traded higher for the next 3-4 days. And if you guys have been in the chat room for a while, you remember Kyle, who was with us for a little while. He used to get short every Wednesday and cover every Friday morning. And it was just, the bond trade du jour for him. And I think that might have been one of the few bond trades he really ever did. But, he had noticed this pattern months ago, and now it's obviously very striking. So again, now, I tried to sell the first bounce back towards that 04 plus to 05 plus level. Didn't like the way it was just sitting there bid, and then we ran all the way up to 8 plus. I know some guys on Twitter were selling it up there. They're probably covering right now. We're trading 4.5. Good trade. Congratulations, guys. I'm not so sure we shouldn't be in that neutral mode here again. I think we can drift back down a little bit more tonight. The big volume print down below us was 02 in the 10-year and 16-17 in the bonds. I think if we start trading below those levels, we could see some new lows, or at least a retest of the lows. I want to sell rallies up towards, the 08 plus to 09 plus level on the 10-year. And I guess we're going to look at rallies back up towards 145.28 to 145.31 in the bonds and trade it that way. And look for, some further selling out of our, creditors in Asia. It's been pretty consistent lately, or at least lack of buying out of them. And then hopefully if you're up real early, cover by the time, the London guys get in. I'm not sure if it's the hedge fund guys playing over there or if it's the branches of, the primary dealer banks that come in buying early over in London and pass their long positions over to the guys in New York who can then sell it to the Fed in the buyback tomorrow morning. Whatever. That's been the pattern. That 02 plus level's key. It's the uptrend line in the 10-year. The bonds are flirting with their previously broken uptrend line again here, right where we sit at 145.24. I said in the chat, close below that level would be very important. We're not closing below that level. We're closing right there. And some technicians, when you break trend lines, they want to see a day or two of daily closes below the trend line to confirm the break. Perfect trend line break, you want to see the market accelerate down through the trend line, which is what I thought we were having this morning. Sometimes you get a bounce back to the trend line. That's why I got short at 4 plus. And then a resell off. Well, we flip back above the trend line. That's not the kind of stuff I want to see as a trend type trade. Range trading still, I guess, is what I'm trying to say here. So play the Fed game, play the game with our friends in the Far East, play the game like we have it laid out here. Don't look for a big new trend. Just job the markets here until, things change. There was a big increase in volume today. That's the kind of stuff you want to see in a trend. I don't think we're there yet. In a trend trade, we're going to, where it's breaking down, you're going to close near the lows. You're going to close on the lows. You're going to make new lows after the pit closes, that type of stuff. We're just not seeing that right now. There is some evidence that it's starting, but we're not confirmed yet. So be patient. Sell the rally. I'm still more inclined to want to sell a rally than buy a dip. But I'll buy a dip, tomorrow morning into the Fed POMO, and then I'll sell it to them and walk away because Friday trades lately have been brutal one-way trades, straight up usually after the early morning lows. So, all right, have a great night. See you tomorrow.